Thanks for joining me on Power Lunch. This is Bloomberg Quint and I'm Ira Dugal. On this very rainy afternoon in Mumbai, these are our headlines. Markets trade weak this Tuesday afternoon with the Sensex and the Nifty slipping nearly 0.5%. PMI data shows the services sector contracted unexpectedly in November, subdued demand post GST being seen as the reason. The government will announce a review of the foreign trade policy amidst the backdrop of fears that GST is hurting exporters significantly. And Cyclone Oki heads towards Gujarat, expected to make landfall later tonight. Prime Minister says the situation is being monitored constantly. All right, we've got a bunch of things to talk about on the show as well. Tushar Arora of HDFC Bank tells us what, if anything, the government can do on the export front. Jatin Damania of Kotak Securities talks to us about iron ore prices globally and what that means domestically as well. And we'll, of course, get an update on Cyclone Oki too. But let's first take a look at how the markets are trading. Neeraj, weakish.
Weekish, sorry, just before I start.
You're laughing about something, not about the markets.
No, about Oki. I saw a tweet by Darshan, I think, that Oki is expected to head north towards Gujarat in full force, though will slow down at Western Express Highway, Sakinaka and JVLR.
We wish.
Yeah, that was interesting. Anyways, yeah, but the markets, yeah, it's a weekday of trade. So yesterday, there was a bit of a bounce and we were hoping that, hey, maybe the bulls are hoping that could that lead to some more upsides in today's session. There were a lot of positional calls given on the buy side as well. I think all of those have gone kaput. So 10,085, the 100-day moving average is 10,067. So that is something that people will be watching out for. VIX too has stayed stubbornly about that 15 mark. So that is something you need to watch out for. The only thing which is helping the index stay a little bit better is Reliance, which is bouncing off its 50-day moving averages. It's done that 4 times in the last 3 odd months, and today's session no different. So up another 14% in the session, 14 points in the session today. But autos are not having a good day. The top 10 losers has 3 or 4 auto names. So Eicher is down, Tata Motors is down, Hero MotoCorp is down, and Hero MotoCorp and all of these actually had a fairly decent month of November, but just a bit of pressure that is coming in. Broader end of the spectrum, I think Sandur Manganese would probably take the mantle of being the stock of the day. You heard the management on Bloomberg Quint as well, so that's doing okay, up about 10%. And companies like Bharat Forge are doing okay. And then there are a few stocks which are at new highs, the likes of Shankara Building or Apex Frozen. But by and large, it's a weakish day of trade. Market breadth not looking too great. Let's see if indeed the selling becomes more intense towards the second half of trade. We've seen evidence of that in the last 3 or 4 sessions. If today's anything like a repeat there, then we'll crack the 100-day moving average, and that shouldn't be too pretty for a Nifty 50 watcher.
All right, we'll watch for that. Thanks, Neeraj, as always. That's the heads up on how the markets are looking. Shifting focus to the economy, India's services sector contracted in the month of November. Nikkei Services PMI came in at 48.5 for November versus 51.7 in October. Remember, when the Purchasing Managers Index is above 50, it indicates an expansion, while a number below 50 indicates that that particular industry is in contraction, in this case, the services sector. The Nikkei India Composite PMI, which blends the manufacturing number and the services number, came in at 50.3, so just about in expansion territory versus 51.3 in October. What explains the decline? IHS Markit, which puts together the survey, said that anecdotal evidence suggests that GST dented customer activity. This is what they exactly said. Underlying data highlighted that service activity fell in response to a drop in new business during November. According to anecdotal evidence, July's GST continued to affect businesses as it led to sluggish demand and lower customer turnout. As with the case with activity, the rate of contraction in new work was modest, said IHS Markit. Now, Nomura Global Markets put in a quick note on those numbers, and they talked about the fact that this was slightly surprising. In fact, in their quote, they said that we are surprised with the sudden dip in service activity in November, especially given that manufacturing firms which face similar issues reported higher activity. It is possible that the predominance of the unorganized sector in services where business models have been shaken was one reason why you've seen these challenges being faced more in a more extreme fashion by the services segment. They go on to say that they do not expect this to last, and they expect this to be a few months, if not just a 1-month hit. That's the services PMI number. Meanwhile, the big two-day Reserve Bank of India Monetary Policy Committee meeting begins today, will end tomorrow. May not end up being that big because not much is expected in terms of rate changes. The consensus out there is that you will see a status quo policy. But nevertheless, an important policy from a trader's perspective, a bond trader's perspective. Remember that bond yields, the 10-year bond yield has been inching higher, has been trading close to 706 in trade today, but has tested that 710 mark as well. And in light of that, what traders will be watching out for most is perhaps the RBI stance on liquidity management. Karthik Goyal of Bloomberg News joining us to tell us what the market expectation ahead of policy is and what they really want to watch out for.
Yeah, it would be very interesting to see like what has happened in the bond market in the last 4 months. Like liquidity is actually one of the very key factors that has an implication for the bond yields, and we have seen the bonds falling for the last 4 months. And that coincided with the Reserve Bank of India started selling bonds through its OMO operations starting July. And that coincided with the already very heavy supply of bonds by the central government and the federal government. So all these things combined and they unsettled the supply demand dynamics in the bond market, and that has resulted in very sharp rise in bond yields in the last couple of weeks. Yesterday's close was at the highest in 15 months. So in all these, what's happening, OMO bond sales has contributed or played a significant part in driving the bond yields higher. And bond traders are really worried, and they just want to hear what the central bank's stance is on the liquidity management. They want to see whether the central bank will go ahead and do more OMO bond sales, or what's their overall stances on the liquidity management. That will give further direction to bonds in the coming days.
Karthik, what would be comforting for the traders just to hear perhaps an indication suggesting that no more OMOs bond sales are in the offing, or a deeper commitment which says that we will maintain liquidity in surplus mode?
So absolutely, it would be interesting to see that bond prices remain supported throughout 2016 because the central bank was doing OMO purchases and it was injecting money into the banking system. But as they started selling bonds, that is getting reflected in the bond prices. So yes, you are right. Like if any indication, bond traders will really cheer any indication about the central bank not doing further OMO bond sales. But it would be very interesting to see what the central bank's take is on its liquidity management, especially on the OMO operations.
Right, Karthik, thanks so much. And that becomes all the more important because as we get into the January to March quarter, there is a fear that there could be incremental borrowings announced by the government as well, which is stretched on its finances. We'll get all of that. I just want to give you the macro picture, the macro backdrop to this policy as well. Remember, there are a bunch of conflicting factors still that the MPC will be weighing. The way we look at it is that there are two core factors that the MPC should be weighing. One of them is what is happening to core growth, and one of them is what is happening to core inflation. So if you look at core GVA, and this is a chart that has been borrowed from Yes Bank, that is showing that the rebound in core GVA, and core GVA essentially strips out government and agriculture, that rebound has been pretty much along expected lines. In fact, that rebound has been sharper than what you have seen in the headline GVA. So while you got headline GVA of 6.1% this particular quarter just a few days back, you've seen the rebound in core GVA being faster. The point there simply is that growth perhaps is rebounding as expected. No, it hasn't taken back to the levels that we would have seen, say, 5 or 6 quarters back. But the expectation is that that rebound has sort of materialized along expected lines, and the RBI and the MPC will take note of that. On the other hand, if you look at core inflation, again, core inflation has continued to be sticky. So at about 4.5% in the last round of October numbers, core inflation continues to be higher than what the headline inflation number is. From here on, the RBI will take into account that stickiness in core inflation plus upside risks to headline inflation, which of course come from both food prices and global oil prices as well. So if you put the fact that inflation is expected to head higher and core inflation remains sticky, while core GVA is starting to rebound along expected lines, perhaps the MPC will take a call that there is no reason to cut rates any further. There is still a constituent within the markets which believes that one odd more rate cut could be announced, given that the output gap but the negative output gap remains fairly wide. But they are a minority right now, the majority of the market expecting that this will be the end of the rate cutting cycle. And if you look at the overall, the long-term rate cutting cycle, and just briefly wanting to point this out, I think the question from here on will be, how long do you remain at that status quo, and when does the rate cycle turn? When do you start to see an uptick in rates? The dynamic there will be actually very different from the other two rate cycles that you see on your screen, the early 2000 rate cycle and then the 2008-9 rate cycle. The reason for that is we are now an inflation targeting central bank. So the question that everybody will be trying to answer is, at what point does the MPC start to hike rates? Does it start to hike rates when you start veering away from that midpoint of 4% inflation, or does the MPC wait until you are at threat of taking out that 6% upper band on inflation before you actually start hiking rates? So I think this rate cycle will be a very interesting one to watch. Morgan Stanley, believes that you could see rate cuts, perhaps rate hikes towards the second half of 2018-19, and that column is up on Bloomberg Quint. So if you go to Bloomberg Quint, you will see Morgan Stanley's view on the rate cycle. They expect a status quo in this policy and perhaps rate hikes starting towards the second half of next fiscal year. That's the big monetary policy. But speaking of policies, let's shift focus to the trade policy. The government will announce the latest version of its foreign trade policy later today. The policy will come against the backdrop of weakness in exports and a surge in imports. While some of this is being seen as temporary impact of demonetization and GST, which have potentially disrupted supply chains, questions remain on whether longer-term issues within the export sector continue to dodge India's competitiveness in the global market. But what really can the government do? That remains the moot point. Uni Krishnan of Bloomberg News is joining us from Delhi. Uni, thanks so much for joining us. What's your sense? What can they really do at this point in time? What's being talked about?
Good afternoon, Ida. Essentially, basically looking out for three major points from the trade policy. Like you said, there's not much room in terms of hand-holding exporters right now. So the first thing the government is trying to do is possibly look at reviewing its informal target of about $900 billion of annual exports, both merchandise and services. There are various estimates out there that you possibly reach about $500 billion by the end of FY18. So essentially, you're nearly half that target, and things haven't really been bright globally, and you've seen merchandise exports remaining sluggish over the last couple of years. So that's the first big takeaway from the trade policy that we are expecting, that there will be some sort of a review. The guidance would possibly be lower than what you had set out at $900 billion for merchandise and services at the start of 2015. So that's the one big part. The other big part is that all this is coming in the backdrop of the problems faced by exporters by way of demonetization, and the second big shock that came to the system was of GST. So you would be possibly looking at some sort of incentives. Given the fiscal space, there isn't much the government can do, but in terms of some sort of incentives, may not be monetary incentives, but in terms of ease of doing business, there would be some sort of SOPs being given out to exporters. And finally, there will be a greater focus on Make in India, the complete value chain, if it can be done domestically without importing any raw products overseas. That's another part of the foreign trade policy that we're expecting in terms of Make in India, greater emphasis. And obviously the other usual suspects of finding newer markets, focus areas, where if you export more, possibly you'll get incentives in terms of import of capital equipment and measures like that.
Uni, it's heartening to see, at least from Bombay perspective, that this time around the weakness in exports is not coming together with calls for a weaker currency. Perhaps the government realizes that these are all short-term issues. The longer-term competitiveness issue is what they need to tackle through a more comprehensive policy.
I think this has been a greater realization. Those calls have been fobbed off by Reserve Bank of India repeatedly. And, there is an understanding from the ministry that exporters need to shape up, you need to improve productivity, you need to streamline procedures to really compete in the global markets. Currency can take you that far, but not further. And if you're looking for some sort of a permanent place in global trade in terms of exclusivity and creating a name for yourself. You need to improve the processes, and that's precisely what the foreign trade policy is likely to do. I don't think you will see very strong voices either from officials, the minister, or from the exporters in terms of calls for sort of a currency peg to boost exports.
All right, Tony, we'll watch out for what comes out later in the day. Thanks so much indeed for that heads up on the foreign trade policy. About 4-ish is when that announcement is expected. Actually, just want to play out a conversation that Bloomberg Quint consulting editor Praveen Chakravarti had with Arvind Subramaniam, the chief economic advisor, on the bigger issue of exports and the problem of exports. Hear out that chat.
I think there's been some confusion over the export numbers. I've been looking at them a little bit carefully, and if you look at manufacturing export growth in the last 3 months, it's been at about 9% in value, dollar value terms, when you do the smoothing and everything. Manufacturing exports, okay. It's a bit down from the early part of the year, but 9% growth is still substantially greater than what we were doing for much of 15 and 16. Now, so in that sense, I think it's picked up. I think the question, what is not clear to me, and we're looking at the numbers, is have our exports grown commensurate with the pickup, as you said, in world trade volumes and the pickup in growth in many of the other countries as well? It's not clear to me. We're looking at the analysis, but it's not that exports haven't picked up from the trough of the 15 and 16. 15 and 16 exports were really, I think, export growth was very weak. And now they have picked up. Part of it, of course, is world demand. But your question about have supply chains broken, I think the jury is going to be out, because unless we get a good sense of how the rest of the world is doing. Also, we're doing some analysis for the survey to see, in fact, whether exports have been affected by the twin experiments that we had or not. Both demonetization and GST. So we're going to look into that a bit more carefully. And so until we finish that, I still would like to reserve judgment on that.
Then what about imports? I mean, imports been very strong.
See, I think the supply chain broken story is for both exports and imports.
Correct. That's why I asked the
exactly,
question.
So it was true that import growth was very rapid. But in the latest
especially
few months,
non-oil, non-gold.
Yeah, exactly. I'm talking only non-oil, non-gold. Exactly. So the argument was that there's been a negative supply shock, which has affected both manufacturing exports and domestic production competing with manufacturing imports as well. Again, we're looking at these things exactly as we speak, and reserve judgment. But on the import numbers too, the latest numbers show a marked deceleration relative to earlier. So let's see what is due to what.
All right, let's extend this conversation a little further, get another view. Tushar Arora, senior economist at HDFC Bank, is joining us on the phone line. Tushar, good afternoon. Thanks so much for taking our call. You're paying much attention to the foreign trade policy. I mean, there's some short-term measures being talked about, like maybe increased interest subvention. But other than that, anything interesting that you think could come off it?
Well, I think the entire discussion is likely to be on 3 broad lines. One, obviously, which everyone is talking about, the GST-related glitch and the relief that exporters are expecting from that front, and how refunds can be made faster, and the entire formula of calculating the refund for exporters. So let's see what the Commerce Ministry has to say on that front. Secondly, the overall, the revival of trade which is happening globally, and why is India actually missing out on a long-term basis, and the entire target of $900 billion of exports of goods and services by 2020 in the long-term agenda, and how that policy can be tweaked, what new additions can be made on that front, and what incentives can be offered on the long-term basis. So the second agenda is likely to be this. And thirdly, this point about
Sorry, Tushar. Okay, Tushar, I think I've lost your line there. We'll try and get you back in just a minute. But in the meantime, of course, as we've been highlighting, export numbers have looked fairly thin. You've had, months of sudden jump in exports, and then you had a sudden decline in the last month. The reason for that was that apparently exporters were trying to avail of the duty drawback scheme, which was expiring. In fact, one of the things that they are demanding, which is probably not doable, is that they remain under the duty drawback scheme and GST does not apply to them. That is not going to happen because you just can't dilute the indirect tax system to that extent. But it's important to try and push up exports to the extent that they contribute to GDP growth. It has been pointed out that unless exports play along, the pickup in GDP growth will be slightly shallow. Tushar is back with us. Tushar, sorry, we lost your line. You were talking about the GST-related issues where perhaps some short-term extension of or a deeper interest subvention could help. But beyond that, would you expect sort of a longer-term roadmap for what it's worth coming from the government?
Yes, so just to give you a few numbers, some of the economies in our peer group, China and Korea and, Taiwan, which are very export-oriented, they are experiencing a very good revival in terms of their export patterns. And, China has experienced a 15% growth year to date in terms of trade volumes. And we are really lagging behind. And electronics is one item where most of the export-oriented economies are taking advantage. And we have, for FITD, on FITD basis, electronic goods, in our case, has contributed around 0.1 to 0.2% to overall exports. So this is the cycle we are missing out on, and I think this is something which government has to take a very active note on. And thirdly, there will be some tweaking as far as incentives which are currently being offered. If you look at the WTO regime and, the entire WTO rules and regulations as far as incentives are concerned, subsidizing exports are concerned, India has moved out of, the poorest list of countries. We have had, per capita income of more than $1,000 for last 3 years. And this means we have to, offer less to our exporters in terms of incentives, and we need to tweak our strategy on that front also. So this will be the third area of discussion, I guess. Keeping incentives, but removing some of them in line with the WTO regulations. So GST plus long-term agenda and plus the WTO regime is something which I expect the overall discussion to be pointed at.
Tushar, where do you stand on the debate that, I guess, it's the answer is fairly clear, but a lot of people pointing out that, if you need GDP growth to really fire up, apart from, of course, the domestic triggers, you need to be able to take advantage of a strong global economy. I think last year, global trade growth or global export growth almost doubled, but India was nowhere in that picture. We may not have much time, but whatever time we have, we need to sort of take advantage of this strong global growth.
Exactly, and if you look at the latest GDP reading, I think net exports contributed very minimally in the positive territory, and before that, in the last quarter, the contribution was negative. So along with investments, I've been pointing out this on a number of occasions that along with investments, exports also has been a major drag on overall GDP growth. And if we need to really revive the momentum ahead, if we really need to reach the 8% mark, it is unlikely, that it would be possible because, without bringing exports back in the robust territory. Just 2 years back, India, just to recall, was doing very good in terms of manufacturing sector exports. We were actually outperforming some of our regional peers. And somehow that momentum has faded away. Short-term measures like demonetization and GST obviously has led to some of the drag, but then there's a structural component also we need to look into.
All right, Tushar, that was very enlightening. Thanks so much for that quick phone conversation. Tushar explaining some of the short, medium and long-term issues that the foreign trade policy may need to actually tackle. Let's move away from that conversation. A special court will deliver a verdict on the 2G spectrum case on the 21st of December. Former Telecom Minister A. Raja and DMK MP Kanimoi are just some of the high-profile names who could be found guilty in what has come to be known as one of the largest scams in the country. Arpan Chaturvedi is joining us on the phone line with some details of what happened in court today. Arpan.
That's right, Ira. So basically, Special CBI Judge O.P. Saini announced today that the judgment will be pronounced on December 21st. And as you said, it's a high-profile case. So we had a number of accused who were also present in the court. Some of the accused in the case are former Telecom Minister A. Raja, Kanimoi, Shahid Balwa, Asif Balwa, Karim Morani. So a very high-profile list. Apart from them, other major corporate and political names are also there in the accused list. Remember, the trial in this case began in 2011. happen, and it's after a good 5-6 years that we will have finally the judgment from the trial court. And this case, as we all know, relates to the spectrum allocation that was done in the year 2008 and the alleged irregularities that were done, that has been alleged by the CBI in the allocation of the spectrum scam. And once again today, the judge announced that it will be on December 21st that we will see the judgment in this high-profile 2G case.
Arpan, thanks so much. That'll be a much-watched verdict. December 21st is the date. Staying with legal news, the Supreme Court will start hearing final arguments in the Babri Masjid demolition case 25 years after the unfortunate incident took place. A 3-judge bench of the Apex Court will be deliberating on an earlier judgment passed by the Allahabad High Court, which had divided the disputed property into 3 equal portions. Queen's Vakasha Sachdev, who's tracking the case at the Supreme Court, joins us on the phone line. Very, very sensitive case, Vakasha.
Yes, it's a very tricky one, and it's also one which has got so much interest because it's crazy seeing the court right now. I mean, the courtroom is literally overflowing with people, and it's such a complex issue that just the pages which are saying who all of the other parties to the case is running into like 10 pages at this point. So it's a huge matter which is going on right now.
All right, Vakasha, thanks so much for that quick update. That is the other important case that is being watched out for. Coming up on the other side, we're going into a short break, but we'll get you the latest on Cyclone Oki. That's headed towards Gujarat. Landfall expected later today. We'll get Skymet weather services to help us understand what weather conditions will look like over the next 24 to 48 hours.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Business news, we're news for business people.
Welcome back. You're watching Power Lunch. Let's take a look at the headlines at the half hour. Weak trade on Dalal Street as the Nifty breaks the 10,100 mark. Mid-caps fall in line with frontline stocks. Iron ore prices have rallied back into a bull market globally. Domestically, too, prices are on the upswing. And Cyclone Oki heads towards Gujarat, expected to make landfall later tonight. All right, let's do a check on the markets first. We've got the Sensex and the Nifty trading weak, about 0.4% down on the Sensex right now, and that's the Nifty for you trading below the 10,100 mark, 10,085. Let's pull up some of the key movers, and then we'll get into a deeper chat on the market. But it's a market where you've had Reliance Industries, I believe, trading on the upside since the morning, but some of the Nifty 50 losers on your screen right now: Eicher Motor, Tata Steel, and Hero MotoCorp. We've got Agam joining us with the details of what the market structure looks like this afternoon. Agam.
Well, weakness persists, Iran. When it comes to the benchmark indices, they're below the mark of 10,100. we have seen a lot of resistance building now at 10,000. This is where we are seeing a lot of put writing, which means a lot of traders are taking positions against the Nifty, moving towards that mark. Should we see the Nifty break, then a lot of analysts are of the opinion that 9,800 can very well be on the cards. But that said, in terms of the upside too, we are looking at a lot of resistance building in around the levels of 10,300. You've already mentioned about the key gainers here. It is the oil and gas space which is leading the few gainers in today's job trade. So you have Reliance Industries and BPCL along with Yes Bank moving upwards. On the other hand, we have seen sustained weakness in Eicher Motors, which has been the largest Nifty on the Nifty decline. Some weakness seeping in the likes of Tata Steel as well as Hero MotoCorp. In terms of turnovers, well, they're largely average. So we're going to have to wait for the final hour of trade, whether or not we do see a substantial increase there. But at around a little less than 3 lakh crores at, well, we're at 130 right now. So we'll have to wait and watch whether or not we do see an increase in trade in the final couple of hours of trade. But for now, the markets are quiet, and that is also evident in the turnovers, Ira.
All right, Agam, thanks so much for stopping in with that market check. We've got, of course, we're not getting into the IPO chat. All right, I thought we were going into a chat on the IPOs. Investors seem to be cautious heading into the new year, and uncertainty over the economy and earnings will prevail. But Mahesh Patil of Aditya Birla Sun Life Mutual expects a turnaround in some beaten sectors. Here's a slice of the conversation he had with Bloomberg Quint earlier today.
We think that this quarter, last quarter, is a kind of a turning point in terms of earnings growth, which has been pretty elusive up till now. But I think a lot of pieces are falling in pace at this point in time, and I think around 18-20% growth looks fairly plausible next year, because a lot of the sectors are coming in from a very low base. I mean, look at the corporate banks, the telecom sector, the pharma sector. Again, the base is very, very low over there. And as I mentioned earlier, we're seeing a broader participation across sectors which were not doing well. So I think that gives much more credibility in terms of the growth what one is looking out for next year. So that the second part of your question. The first part of your question in terms of where we are trying to really managing in this kind of environment, I think our outlook is that the market from here on, we're not expecting very large returns from the market. So any kind of a return, especially in the larger good quality names, if you are able to see a return of around 15-20% with good amount of visibility, I think that's a good return to look for at the stock level also. So I think it's important to look at companies and get a firm handle in terms of earnings, where the earnings certainty is there and earnings growth is slightly better than the broader market. Other sectors and stocks where we would be focusing on, and that will probably be expecting better growth in, say, the consumer discretionary side. Again, the cut in interest rates, rising rural incomes would lead to, and also the shift from unorganized to organized. We have not seen that much, but I think you will see that as GST gets totally compliance starts to happen much stronger next year. So that's the sector which we're seeing a strong growth coming in, and at the same time we need to be some contraplays in the portfolio which can surprise positively, say a bit in the corporate banks or even telecom sector, which are currently depressed but can surprise over the medium to long term.
So that's your contra, PSU banks and telecom?
Yeah, in a limited, again, we're not going to go too aggressive over there.
Sure.
We will want to watch how things pan and then slowly build exposure over there.
Anything that you are anti-consensus, you don't think that the market is pricing in right, either on the upside or on the downside?
I think not many actually anti-consensus, because markets is very finely pricing everything at this point in time. Okay. So the first time we are seeing not too much distortion in the market. I think sectors which are doing well are already pricing in the right valuations. Sectors where the outlook is not good are slightly subdued. So not seeing much. In fact, in our portfolios also, we are not seeing a very large tilts or very aggressive call on any particular sector at this point in time.
Okay. Great. Mahesh Patil, one last thought. With an assumption that we don't see any negative surprises from any of the macro events that are slated to happen, you would presume that any large correction will get bought into? You would be a buyer because you guys are the ones which are putting in the money right now. If the market were to correct about 4 or 5% from these levels, would you be an active buyer?
Yeah, so I think if the outlook on the market remains positive, we think this is a market where you should see making newer highs. and the outlook also on the sector is now improving. So any correction, it will give an opportunity to really buy stocks at a more reasonable valuation. That's what we are looking at. So I think clearly good companies, if they correct whatever 4, 5, 6%, would be a good opportunity for us to look at deploy some of the cash which we have, but also for investors to really buy into that correction, because if you're expecting around 12% kind of a return, if you get something 4, 5% cheaper, that increases your return expectations for the year. So I think this is a market where I think while it's kind of expensive, but we believe that we are coming in from a very, very low base. So we are at the bottom of the economic cycle, which will improve. So even some amount of derating happens in terms of PE multiples. I think markets can still, because of stronger earnings growth in the coming years, can give fairly decent return if expectations are fairly well balanced from this market. And any correction would be a good entry point to enhance those returns.
Multi-specialty hospital chain Shalby is looking to raise a little more than 500 crore from the primary markets. The Ahmedabad-based company has 11 operational hospitals in India and 6 outpatient clinics abroad. Darshan Mehta standing by with the details of the offer. Darshan.
Okay, so it's a combination of a fresh issue and an OFS. So the total size is 505 crores, out of which 480 crores is the fresh issue. The OFS is the promoter, Dr. Vikram Shah. He's selling in shares worth almost 25 crores. So that's how it becomes 505 crores for the entire issue. Now the price band is 245 to 248. Anchor book is already filled at 248. So an assumption is that the market cap on issue price and listing will be almost 2680 crores if it lists at par, and the issue date, it starts today and ends after 2 days. So these are the broad contours as far as the issue is concerned. Right now promoters own almost 98% of the shares. Post the issue, promoters share will come down to 79%. The public will come to almost 20%. So this is the pre and post IPO issue in terms of shareholding. 11 operational hospitals, 11 international outpatient clinics, and 2,012 beds. They have presence in Africa and UAE as far as the international operation is concerned. What they plan to do with the 480 crores, 300 crores will go for debt reduction. Equipment capex is 64 crores and 11 crores is hospital infrastructure. The balance is general corporate purposes for which the management will use those funds. 4 business models that the operation has. 50% of it is via owning and operating multi-speciality hospitals. These are their own hospitals. The balance 45 to 50%, the majority comes from there, comes in from revenue sharing model to operate and manage hospitals. Very small chunk comes from third-party tie-up revenue sharing with hospitals. And the last one is orthopedic healthcare through outpatient clinics. So these last two are very small components. The majority of revenue comes in from the first 2 contribution. Now looking at the revenues from a 275 crore top line in FY15, they've moved to 325 crores. So it's a 15% growth that they've done, and they've done 90 crores in the first quarter. So pretty much they will come in at almost 360, 370 crores if this is to be annualized. If you're looking at the profit trend that is there, from a 26 crores it moved up to almost 62 crores, and in the first quarter they've done in almost 14 crores. So pretty much will be in par. The margins have expanded significantly in the first quarter, on an average from 22 to 24%. They've moved to 30% because some of their loss making or the final stage clinics hospitals have actually turned positive. So that is the reason margins have gone up. In terms of revenues, one of the smaller hospitals, revenues of just 325 crores on an FY17 basis, but the EPS is much higher than an HCG or a Narayan Hrudayalaya, and comes par with a Fortis Healthcare. So that's the peer comparison that is there as far as this company is concerned. Now in terms of average revenue per bed, scores in much higher than its peers, almost 34,000 compared to Narayan's 17,000 and 28,000 for Apollo, and the number of days stayed is also much lower than its peers. So that is something that is working in favor of the company. Now, if you're looking at the valuation on an EV to EBITDA basis on FY18, it's expensive at 28 times compared to a 20 times for Fortis and a 27 times for Narayan Hrudayalaya. But it deserves this premium valuation because the ROE and ROA are much higher and the margins are much higher. So 22% margins, EBITDA margins compared to an 11% for Apollo or a Kowai, which is at par. HCG 12% single digit for Narayan Hrudayalaya, and the ROE is almost 25%, and the ROA is much higher than its peers. So that is why it's deserving the premium valuation of 28 times EV to EBITDA.
All right, thanks, Arshan. Moving on, global iron ore prices have rallied close to 20%, putting the commodity in bull market territory. The dynamics at play in the market, though, are a little contradictory because China is actually cutting back on steel capacity ahead of the winter season to curb pollution. Lower steel production should mean lower demand for iron ore, but looks like the market is focused on the improved profitability of steel firms, which could lead to increased demand for higher grade iron ore. Let's try and understand what the dynamics in the iron ore market are. Jatin Damania is AVP Research at Kotak Securities, joining us on the phone line. Jatin, good afternoon. Thanks for taking our call. What is your sense of what's going on in the global iron ore markets first, and then I'll talk about India a bit?
See, if you look at the global iron ore market, the raw material prices, that is the steelmaking raw material, has risen almost 20% from late October. And in our belief that it is because of the the stocking or the higher demand of the high-grade iron ore as compared to the low-grade ore.
But Jatin, what exactly, you're saying that you're seeing an upside only in the higher grade iron ore prices because the expectation is that as profitability improves, steel producers will move towards higher grade iron ore?
Yes, because see, there are two things. If you look at the global market, the steel making companies, the profitability has improved. And the demand and the inventory of the iron ore globally has also come down a bit because of the high demand of the high grade iron ore. So because of the rundown in the inventories and the high demand of the high-grade ore, we believe that the current market, the current iron ore price rally will probably sustain, probably for another month or so. But on the longer-term basis, we continue to maintain a cautious stance on the overall iron ore outlook.
Okay. What has been the follow-through of what's happened in the global markets into India? Are you seeing a similar upside in Indian iron ore prices as well?
Well, see, if you look in the domestic market, in the companies, in the private miners in Odisha, as well as if you look at the NMDC, they have increased the prices for the month of December. And NMDC is almost taken 13% hike in the month of December, which is highest in the absolute number since last 1 year. And this is largely followed due to the increase in the global iron ore prices, plus increase in the sponge iron prices in the domestic market. The increase in the domestic prices was also supported by the couple of iron ore mines getting shut, probably for some of the other region in Odisha. So because of the lower supply, the iron ore prices has taken a hike in the domestic market. But this will be there for a month or so, and post that, once the iron ore supply starts from Odisha, we believe the prices will correct from the current level in the domestic market.
All right, Jatin, thanks so much for that. That's a view on iron ore. So largely looks like it's a change in demand from one grade of iron ore to the other, where perhaps supplies and inventories are not as high. In fact, speaking of iron ore, we spoke to the management of NMDC earlier today. Let's hear out what they had to say about prices and where they expect things to go. Mr. T.R.K. Rao, Commercial Director at NMDC, spoke to Bloomberg Quint. Listen in.
If you see the domestic demand has been quite good this year compared to last year. The steel consumption has been grown around 4.1%. And then all our customers, especially the Vizag Steel Plant, the SR, they are doing very well. They are double-digit growth, more than 25%. So there is quite very good demand in the domestic market because of the good demand in domestic market. And also considering that our competitors like the Orissa miners have increased prices. We have increased our prices in the month of December. And if you see our sales, in the first 6 months, we have done record sales, the best ever sales in the history of NMDC. That's primarily because of the good domestic demand. And in the coming months also, the sales will be very good. You said that there has been some decline in sales, but that primarily happened in the month of October due to an accident on the KK line that has pulled down our sales, and it has nothing to do with our demand. As far as the prices are concerned, yes, the price outlook remains quite positive. The Chinese mills are in a very stronger position. The margins, the HRC and the rebar prices have gone substantially high, and even the low-cost mills are in the order of around $270 per ton mill margins. Down the lane, given the sintering cuts and the rebalancing in supply and the supply side cuts, I think the outlook for prices globally and domestic looks to be quite positive.
Could you give us some idea of how much more room there is for prices to move up here based on both those two factors that you've just described, which is buoyant demand domestically and a conducive price environment globally?
As you know, it's very difficult to hazard a guess on exact numbers, but they would be range bound. Now, I think in $4-5 range, the international prices could be there, and compared to the current levels of prices. And NMDC price also, yes, we also see a good outlook in the coming months.
What about volumes, Mr. Rao? Good morning. Because if I look at your production and dispatch figures, they have come off from the levels that they were at the start of the calendar, or even November and December 2016 or 2016. Why is this happening, and what's the outlook there?
Yeah, as I had explained to you in your earlier question, the volumes have come down primarily because of the evacuation issue on our KK line. That's our major transportation of iron ore line. And there has been a major accident. Now that will be over on December 12th, and there will be normal movement of railway rakes. This will definitely push up our sales, and we are hoping to make up. And last year we did in this second half around 18 million tons, and we hope to do the same thing and beat the last year record. Last year we did 35.6 million tons. This year we hope to end up at 36 million tons.
Leather tanneries have the reputation of being one of the biggest pollutants in the area. Bad odor and chemical waste discharge has prompted civic authorities to move them out of city limits. But mere relocation does not yield the desired results. Find out Purva Chitnis, who travelled to Kanpur to meet some of the biggest leather manufacturers based in the region.
Sun rises over the Ganga, the calm we feel is shattered by the stench of garbage around us.
Kanpur's water is amongst the most polluted in urban India. Residents living close by the river Ganga often complain about the noxious odor and effluents. As you can see behind me, the water is not fit for consumption and is full of discharge.
टेंडे हैं जो वहाँ से आ रहा है ये पानी, और सुनवाई तो ये कभी हुई नहीं है, क्योंकि गंदगी यहाँ के घर वालों को देखिए कितनी गैस पड़ती है, उनके घर के बर्तन अर्तन काले हो जाते हैं, लोगों के पेट में भी गैस जा रही है।
ये ट्रीटमेंट का जितना सा पानी है सब इसी में आता है और इसी में जाता है, इसी में मिलता है, इसी में लोग नहाते हैं, और यही समझिए बोरिंग होती है, यही लोग आदमी जो है यूज़ करके पानी पीते हैं। 50 करोड़ आदमी जो है यहाँ कानपुर का जो है बीमार पड़ा रहता है।
Apart from the local residents, the UP government too claims that the 400 tanneries are the main cause of pollution in the Ganga. Around 100 tanneries in Kanpur have already shut down as they did not meet the NGT's emission guidelines. Local tannery owners say they are willing to comply, but red tape is a big problem.
ये सन 96 में ट्रीटमेंट प्लांट जो चालू हुआ, अब वो क्योंकि 20 वर्ष पुराना हो गया तो हम लोगों ने सोचा कि इसको अपग्रेडेशन मॉडर्नाइजेशन होना चाहिए। करीब 10 डिपार्टमेंट हैं जो सिर्फ एफ्लुएंट की मॉनिटरिंग करते हैं, जैसे एक है नमामि गंगे, यूपी पॉल्यूशन कंट्रोल बोर्ड, सेंट्रल पॉल्यूशन कंट्रोल बोर्ड, नेशनल गंगा बेसिन रिवर अथॉरिटी, एनजीटी, यूपी जल निगम, नगर निगम और तमाम 10 विभाग हैं। तो सबसे पहले तो इन सब विभागों को एक करके आपस में समन्वय बने और एक विभाग एक इंडस्ट्री को मतलब देखे। अब हम लोगों को कभी कहीं से लेटर आ जाता है, कभी कहीं से आ जाता है, हम लोगों का आधा वक्त तो उसी में जवाब देते देते गुजर जाता है।
We live in this environment, we want this, we are breathing this air, we are drinking this water, so we as a citizen would like to have our air clean, our water clean, our river body Ganga river to be clean, we want our city to be clean, our country to be clean. There is certain capacity, certain constraints. We can only do to the extent we are able to do, or we are able to financially sustain. All these common effluent treatment plants have to be upgraded, and now how much government is going to support that we still do not know, but this is the project which we have to complete within 2 years.
Central Leather Research Institute also working on the new system on the effluent treatment plant, and they are giving us the assurance they will be able to make the common treatment plants with the new technology where we should be able to achieve the norms and with the reasonable cost.
According to the guidelines, the water from the primary treatment center should be further treated at the common effluence plant before being discharged into the river. But a visit to the plant tells a different story.
फैक्ट्री वाला इतना दोषी नहीं जितना ये पोल्यूशन कंट्रोल बहुत दोषी है। ये यहाँ बगल में ट्रीटमेंट प्लांट है, डीजल आता है, लाइट चली जाती है, डीजल तब बिक जाता है। ये समझ ये हालात है, मोटर चलाते नहीं, डायरेक्ट गंगा बाईपास कर देते हैं।
ये टैनरी से आ रहा है, वो गंगा जी जा रहा है, अगर इससे जाता है ये जो लगा हुआ है तो इससे वो प्लांट में जो है फिल्टर होता है, लेकिन उसमें नहीं है, डायरेक्ट खुला है आपके सामने। ये टूटा हुआ है तो डायरेक्ट बस वो जा रहा है गंगा जी में।
अगर गवर्नमेंट को हकीकत में गंगा साफ करना तो अपने कर्मचारियों पर थोड़ा सख्ती करनी पड़ेगी, वरना गंगा कोई दुनिया ताकत नहीं साफ कर सकती।
After wreaking havoc in Lakshadweep and Kerala coasts, Cyclone Oki is now headed towards Gujarat. The storm is expected to make landfall later tonight. The Prime Minister says the situation is being constantly monitored. Joining us on the show now is GP Sharma, Vice President of Meteorology and Climate Change at Skymet. Mr. Sharma, good afternoon. Thanks for taking our call. Can you give us a sense of what weather conditions will look like in the Maharashtra-Gujarat area over the next 24 hours or so?
Okay, good afternoon. See, the cyclone, as we said earlier also, though it has been downgraded to a severe cyclonic storm from its earlier category of very severe cyclonic storm, but then it is still potent enough to cause fairly heavy rainfall over a couple of areas which include coastal parts of Maharashtra and parts of Gujarat. When I say Gujarat, it's South Gujarat particularly, and also parts of Saurashtra which are adjoining to the Gulf of Cambay. Okay, now the system is inching towards the coast now. Therefore, the proximity of the coast is going to weaken it further, possibly to a cyclonic storm shortly, and thereafter, late in the night, we can expect it to become even a deep depression and likely to cross coast of Gujarat, I will say anytime between sometime late in the evening to night. And most preferable area for crossing it should be close to Surat. It could be anywhere between Bhavnagar and Surat. Mumbai has already experienced a good amount of rainfall. Going by the season, when it remains dry most of the time in the month of December, having 30 millimeter plus rainfall in the last about 15 hours or so, it's phenomenal. Okay, and the rains are still continuing. They are likely to continue further, at least I will say, for another 6 hours or so. You can have good rains, and thereafter possibly it will slow down and then become light. Okay, that's it. And Maharashtra, obviously, particularly Mumbai, once the system moves further northeastward, it does not remain in a favorable zone any further thereafter to have some heavy rains. Okay, so that's it at the moment. Yes, please.
Mr. Sharma, so in the coastal regions as we approach high tide hours, is there reason to be concerned?
You see, yes, you're right. The rains of the system, particularly the strong winds also will be there once the system inches closer to the coast. We can expect the winds to pick up along the coastal parts of Maharashtra as well as South Gujarat, parts of even Saurashtra also. Saurashtra, when I say any belt between Junagadh, Bhavnagar, even up to Diu also, we can expect the winds to strengthen. And in any case, the fairly heavy rains over these parts along with the wind directions and the speed which we will have make it that combination a little deadly combination to cause damage to unprotected some structures or some shelters also. And rains, as I said, they are going to continue over parts of Gujarat and Saurashtra for the next 24 hours or so. We can expect them to ease out only by tomorrow, maybe later in the day or so. That's it.
Okay, Mr. Sharma, there have been some reports of hailstorms in the Mumbai-Pune region. Can you confirm to us whether that's linked to these weather conditions and if that's true at all?
See, such systems, they are capable of causing the hailstorm activity, though it's not very common in this particular part of the season as such. But since these are very strong systems which are capable of extending to very great heights, even going beyond about 40,000 feet or so, that's about 12 kilometers or beyond, So the chances become, when the convection goes up to those heights, you can have some hails. But the formation of hail and its occurrence, it's a purely sometimes localized phenomena. It doesn't become a widespread phenomena. Sometimes, therefore, goes unreported also, but then it can't be ruled out. If it is there, yes, there are something over that pocket, particularly northern parts of Madhya Maharashtra and coastal Maharashtra. We need to be a little cautious in terms of even this particular activity, which is hailstorm and heavy thunder shower also. Yes, please.
All right, Mr. Sharma, thanks so much for that kind of comprehensive look. Here in Mumbai, of course, schools have been closed for the day as a precautionary measure. Rains are continuing, but as Mr. Sharma explained, you should expect that to continue for the next 24 hours or so at least. Weather conditions are being monitored, and the Prime Minister said, of course, even in Gujarat and other areas, they're keeping a close watch. That's all the time we have on this edition of Lunch. Thanks for watching.